So the earnings parade continues, and I got to tell you, most of these names have reported not only beating the street on the top and bottom lines, but many have offered higher guidance. Now, the market was perhaps priced for near perfection, which explains why we are getting some of these struggles every day we see the market open higher, but then drift, although we're getting breathing some extra life at the moment. Now, here's the thing. You've got a laundry list of concerns, including the election outcome, the vaccine race. We assume it's going to happen, but we want to watch it. And yes, there's still a glimmer of hope on the stimulus front. Meanwhile, initial jobless claims declined significantly, more than anticipated, in fact, to 787,000, another sign that our economy is recovering really a lot faster. It's continuing to defy the odds of all the experts. So there's a lot to cover, and I want to bring in three of the best to help us do it. Nicholas Wealth Management President David Nicholas, Edward Jones Investment Strategist Neela Richardson, and Walzer Wealth Management President Rebecca Walzer. Let's begin with the earnings season, folks, because when the dust settles down on all the other stuff, the fundamentals always ultimately decide winners and losers. And David, your thoughts so far on what we've seen?
Yeah, Charles, earnings season has been great. I mean, expectations were low to start with, but man, companies have been beating left and right all week. But I will say, as great as earnings have been, it really hasn't been enough to move the broader market. Markets are fighting COVID, they're fighting elections, they're fighting stimulus. But some of the names, like the stay-at-home names, like an Align, had an amazing earnings. Stock went through the roof today. If you look at a more boring company like Coca-Cola, they beat the stocks doing good. So you just got to know the stocks that you're owning. But just because earnings are doing good, if you're owning the indexes, you're treading water. So this is why investors need to watch your show, Charles, because they'll continue to find the names that are doing well in this environment.
Well, I appreciate the plug, but you're 100% right. Neela, that's why I love earnings season, because you can't find the best of breed. For instance, CSX posted their number. The stock went up pretty nicely, while rival Union Pacific, they posted their numbers, and that stock got hammered. So I want to know just some of the nuances that from earnings season, it's early, but some of the nuances that you're picking up so far.
Well, let's start with the macro. And first of all, it's great to be back with you, Charles. It's been a while. But let's start with the macro picture. We expected that earnings would hit a bottom in the second quarter. They've declined 35% year on year. And we'll see that in slow improvement through the fourth quarter and a strong rebound in 2021. So that's the big macro picture. But when you look at a company like CSX that has been able to grow volumes in the third quarter while lowering costs, you get the secret sauce of what to look for with companies. You want to look for those companies in any sector that has good management, the ability to grow dividends over time, and to contain costs. That's what CSX has demonstrated, and that's what we are looking for in terms of our companies that we are watching in terms of growth into 2021.
I love it. Great investable advice there. Rebecca, on the stimulus front, right, these talks continue to linger, and I don't know, is it more than just political gamesmanship at this point? Can something still happen?
I don't see anything happening, Charles, before the election, but I don't think we necessarily need anything to happen before the election. I think Nancy, sort of overplayed her hand, saying there was 48-hour deadline if something was to get done before the election. But look at this number today. I mean, 787,000. It's an incredible number. And you combine that with the retail numbers from last month, from September, and you see that the economy really is starting to come back. Now, you and I have talked multiple times. We need airline stimulus. We definitely need something. And Mitch McConnell is taking a much more targeted approach for what really needs to get done right away. But I just don't see anything happening, Charles, before the actual election. It's just less than 2 weeks away. So I don't think investors are counting on it before November 3rd at this point. I think they're looking at these earnings season numbers, they're looking at the unemployment filings, and they're looking at retail and housing and saying that it's going to be okay if we don't get it before November 3rd. Yeah,
it's hard to imagine anyone's modeling it for now. But Neela, I do find this whole new Wall Street narrative, it's a bullish narrative, and I'm hearing it all over the place, that Joe Biden would be fantastic because he would come through with $3 trillion in stimulus. Of course, it ignores the impact of higher taxes, more regulations. So have you begun any adjustments in your portfolio based on who you think will win on November 4th?
What's really interesting is that we've already seen $3 trillion spent on the fiscal side. We're waiting to see if we get even $1 trillion more this year. So stimulus is a fact of life, no matter who sits in the Oval Office. You're right. There are some vast policy differences, but the truth of the history of the markets, if you look back over the last 100 years of stock market performance, you've seen stocks grow about 10% a year, regardless of who sat in the Oval Office, regardless of who controlled Congress. Because as David was saying at the beginning, it's really those economic fundamentals that matter most. Whoever wins inherits a COVID economy, and that is the economy that we're stuck with until there's a widely distributed vaccine. Once that happens, we can talk about the policy. For now, the pandemic is in the driver's seat, but we still expect that these fundamentals, when you cite those better economic numbers, those indicators, that means a recovery is taking shape. We think stocks perform well.
Yeah, no, I think whoever wins will be dealt a pretty good hand considering where the consumer is. And I say this every day on this show, debt to disposable income, savings, wages, and all these other things that we see, like the existing home sales today. David, on that note, last time I know we talked about this, you said that your modeling actually suggests President Trump will be reelected. Are you still seeing that?
Yeah, call me crazy, Charles, especially looking at some of the polling right now. But yeah, I mean, the markets are still pointing to a Trump win. I mean, how the markets perform between August 1st and the election day is very telling. If you look at the last 100 years, if the markets are up over that time period, that bodes very well for the incumbent. That hasn't changed. So unless we get a significant sell-off between now and election day, I'm still very confident that the markets are higher because they are trading on certainty of lower taxes, smarter regulation, and a business-friendly environment.
So, Anila brought up the fact that markets have gone up under both political parties, but the dynamics of those markets really has been intriguing. And I want to bring that up because I'm going to go a little bit more granular, guys. This morning, Goldman Sachs said it's a good time to take profits on Peloton. We've seen where Peloton's been under pressure all week long, along with a whole lot of these other work from home darlings, if you will. But airlines are looking really great today. The cruise operators are looking pretty good. So, Neela, with that in mind, is there going to be a change in leadership? Okay, let's say the market does well, but certainly it won't be the same names, will it?
Charles, what we've observed over this past 6 months of rally since the March low is whenever we see good economic news, we see the market rally broaden to sectors. And we think that that is going to be the trend going forward. Sectors that have lagged in the rally since March 23rd will actually could potentially outperform as the economy takes shape. That's why it's important to play both defense and offense. You don't want to abandon your leaders now, especially with some economic challenges ahead, but you want to position for the recovery. So that's a diversified quality approach.
I want to squeeze this in with 30 seconds because, Rebecca, on your podcast, you take a serious shot at the tech companies, suggesting perhaps they're the greatest threat to this country. Does that mean you don't have them in your portfolio?
No, of course not. I say that too at the beginning, Charles. I say it's very divided. That I love free markets, and but what big tech has done here, and obviously we've loved them through this pandemic, right? But what big tech has done here is we usually see censorship by foreign governments that are like communist in nature, and they want to control people through the control of information. But big tech has done something by leveraging Section 230, which is an exception to the publisher rule that you're liable, and they've said, hey, we're not a publisher, we're a free platform. And they've gotten millions of Americans on it and people around the world. And now all of a sudden they're sort of yanking the carpet out from under us and saying, you know what? Oh, we're not free. We're not a free platform. We don't like your opinion. We're going to censor it. And it's very one-sided. And I just don't see that is going to be able to stand much longer. It's so obvious now. At least they used to try to have the imprimatur of impartiality, as we say in the law field. But it's all gone now. And I think it's over for them. So I don't want to break anybody up. I'm not a fan of that. But at the same time, we have to have free flow of information and not somebody determining what we can and cannot see as Americans.
Well, we'll continue that discussion later in the show. I've got Keith Fitzgerald coming up, particularly on whether or not we should own those stocks. Rebecca, Neela, David, thank you all very much. Always appreciate you guys helping us out here.